Kalshi Launch Cryptocurrency futures would move the event contract exchange into a bigger derivatives arena. The reason it matters is the platform already has crypto event markets, but futures need clearer contract scope and regulatory handling. The verified setup is Kalshi is moving toward crypto futures after gaining margin capability and building distribution through crypto-linked markets. That shifts attention away from prediction market branding and toward futures scope. The anchor number is margin approval, while US venue shows the scale already visible. That keeps the opening question tight. Can Kalshi move past rule filing without the story outrunning its evidence? A viewer who only sees prediction market branding misses why contract specs and asset list define the risk range. The baseline is already specific. The planned product would let traders take future price exposure without holding the underlying asset. That gives the story a measurable anchor. It also keeps the focus on what has actually changed, rather than assuming the outcome from the headline alone. The scale marker is margin approval. The surrounding detail, US venue, shows why this is more than a loose talking point. That baseline also explains why asset list belongs in the setup rather than the conclusion. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism behind the move is futures can support hedging and short exposure, but leverage also introduces liquidation risk during sharp crypto moves. That matters because mechanisms reveal where the stress enters the system. In this case, futures scope is the channel that connects the headline to the practical risk. If that channel weakens, the reaction can fade. If it strengthens, Kalshi has a clearer reason to remain in focus. The mechanism ties margin approval to contract specs, so the next reaction is not random. The scope is not unlimited. A US-regulated venue could appeal to institutions and retail users that want compliance-friendly crypto derivatives. The affected side is CFTC, and the visible clue is US venue. That is where the story becomes useful for people tracking risk instead of reacting to noise. The consequence should be measured through asset list as well, because that is where the current uncertainty can show up. Webull also matters here, because it shapes the route from futures scope to actual decisions. The unresolved part is launch timing, contract specifications, covered assets, and any additional CFTC steps remain unconfirmed. That does not erase the confirmed facts. It simply means the next claim needs evidence, and the best evidence would be rule filing. The story should stay in that lane. If the evidence does not arrive, the strongest conclusion remains limited. The proof has to appear in rule filing, not just in repeated claims about Kalshi. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Kalshi Launch Cryptocurrency, the next signal is a formal product notice, rule filing, or launch details that define which crypto contracts are covered. That is the signal that can separate a temporary reaction from a durable shift. The closing read is simple. Futures scope has to prove itself. Viewers should compare the next signal with contract specs and asset list before treating the story as resolved. That is why the final read stays tied to contract specs, asset list, and rule filing.